That's understandable. What can happen is you can give yourselves, let's say, a guaranteed contract or guaranteed payments rather, guaranteed payment of some sort, or you may just not pay yourselves. A lot of times, owners do not pay themselves just because it's the startup phase of the business. They need the business, revenue to pay for expenses, and the expenses and the survival of the business comes before the compensation of the people that founded the company. So that may be something that happens. Ideally, you want to go through a payroll company. If you do start to pay yourself, it just makes that process a lot easier to track, to keep track of. If it's something that does not work for the budget in the initial stages, what can happen is there are checks that are written to the owner. So you're doing a check or you're doing a money order or something like that indicates that this was some sort of compensation to the owners of the business. So it just depends on how you want to do it, but ultimately that is what that process that we're looking at setting up, where we're going to have a discussion on a monthly basis to say, okay, this is the money that came out of this particular account on this particular day. What was that for? You both will go through what that expense was. We'll categorize it accordingly. And then going forward, we'll be able to kind of replicate that for all of the expenses. So like you said, right now there's no rent, but if in the future there's rent, we'll be able to categorize that appropriately. If there are, food supplies that you're purchasing, so you're going to, like a restaurant depot or something like that, and you're purchasing food, we can do that one of two ways. One, we could just total the total bill, or two, we can get into a distribution of a categorization of, was that, sushi, was that, soda, was that water? And that way, from an individual category standpoint, you as not just tax preparers, managers for the business, you can get an understanding of what you're paying for specific items. So the more granular you can get, the more you can get that consistently. In the long term, the better that helps the business. Starting out, you may just want to default to say, hey, let's just do Restaurant Depot, whatever the invoice is, and that's it. But if you want to get an understanding of your food costs and your food profitability, you eventually want to get to a space where you're breaking out your meat expenses and maybe even lamb, chicken, and being that specific. It's difficult initially. It's a pain in the neck from an accounting standpoint, from a tracking standpoint, but as the manager of the business, it actually is very helpful in managing the price and the profitability per shipment for your business and for your customers. So you may discover, for instance, that you're paying, let's say, and I get this from McDonald's, actually from Subways. I originally, years ago, looked at purchasing of Subways, and they're very, very specific about what each individual item costs, down to the difference between the straw and the cap and the actual cup for a container for liquids. And then they're specific about how much does this particular soda cost, how much does this particular wrapping cost. That's, like I said, at a granular level that you may want to get to. But again, depending on how much time and energy you have to kind of put towards the data entry for that and then the categorization for that. But yeah, but bottom line is we can get into a process where we're tracking the expenses by category, and then eventually, obviously, by total.